This is Tony Novak here to share a few points on saving taxes and trouble. I put a slash there, verify. Now, in the field of accounting, you may have heard the phrase trust but verify. We hear that again and again in the field of bookkeeping and in auditing. But in taxation, we approach it a slightly different way. The tax law and standards for CPAs and EAs and probably anyone preparing tax returns, it's called under IRS guidelines, it's called Circular 230. Anyone in the field of taxation is bound by a different standard. That is that we can trust if whatever you say to the government, that is assumed to be the truth. Whatever you say to your CPA, this is how much I made, this is how much I spent, that is assumed to be the truth. And we do not need to verify. The government obviously does not verify the vast majority of the information on your tax return, particularly if your tax return is a little more complicated, if you're running a business or investments or something else. We're a trust-based tax system. There is a major exception to that, and that is when we have reason to know or believe that what's being presented is not the truth. So bottom line is your accountant and your IRS examiner and everyone else is going to believe you unless they have reason not to. And when they have reason not to, then the requirement to do an extra bit of work to actually verify more of the data before presenting it or accepting it as fact comes into play. And if it's an accountant or bookkeeper or an auditor, guess who is paying for that extra step of verification? You are, of course. So my point and the reason for this broadcast now is I have a few clients that just this past week didn't live up to their word. What they said turned out not to be the truth, the way they behaved, what they said they were going to do, and it raises the level of risk for the entire engagement. I wouldn't blatantly say I can't trust them anymore. I wouldn't say it as simply as that, but it raises the bar in the amount of work that I need to do in order to do a fair and legal and appropriate job for their tax situation. In other words, if I'm going to present something, whether it's a financial statement to a banker, whether it's a financial statement to the IRS to settle an audit case, in any of those cases, it's going to be more work for me to do the verification and do more checking because I can't just believe what they said because what they said the last time or the last two times turned out to not be true. And that's a rough situation. So, in other words, doesn't bother me. People give wrong information all the time. It's not an emotional issue. It's a financial issue. If you set a pattern of not being reputable with your word, then the accountant's got to take additional steps to verify. And it's really as simple as that. We'd love to hear comments, feedback, thoughts. I'm easy to reach on social media. This might be an interesting topic for discussion. Or if you want to talk one-on-one about your situation, I welcome that too. There's no obligation. You can find me at the website taxproblems.cpa, and my contact information is there, and we can arrange a time to talk. It's Friday afternoon. I will not be recording tomorrow, but I will be back on Sunday.